Are you still struggling to catch and ride a trend? In today's video, I will present to you an easy-to-achieve method to ride the trend effectively. First, let's understand why trend trading is more desirable as opposed to scalping. Firstly, let's define what a trend is. A trend is the general direction in which an asset is moving, either up, down, or sideways. Trend traders look for these patterns and use them to inform their trading decisions. One of the most important things to understand about trend trading, it is a form of momentum trading. This means that traders are looking to follow the direction of the trend rather than betting against it. However, it's important to note that not all trends are created equal. Some trends are strong and clear, while others are weak and choppy. That's why identifying the strength and direction of the trend is a crucial step in trend trading. There are several ways to identify trends. Trend lines, which are diagonal lines drawn on a chart that connect a series of higher highs or lower lows. These trend lines can help traders see the direction of the trend. Another popular tool for trend trading is moving averages, which are lines that smooth out price data over a set period of time. Traders can use these lines to identify the direction of the trend and to find potential entry and exit points. The MACD indicator is another tool that can be helpful for trend traders. This indicator measures the difference between two moving averages and can help traders identify when a trend is strengthening or weakening. Here are some pointers on how to use the MACD to identify the trend. When you look at the MACD line, in my example is the blue line at the bottom of the screen. MACD line is above the zero line. It indicates that the asset is in an uptrend. If the MACD is below the zero line, it indicates that the asset is in a downtrend. The signal line, which is the red line in this example, the MACD line crosses above the signal line. It is a bullish signal indicating that the asset may continue to rise. And if the MACD crosses below the zero line, it is a bearish signal indicating that the asset may continue to fall. And then when you look at the histogram, which are the blue bars in this example, if the bars are above the zero line, it indicates that the asset is in an uptrend and that the strength is increasing. And if the histogram is negative, that is below the zero line, it indicates that the asset is in a downtrend and the strength of the trend is increasing. In this video, I've just covered 3 indicators to help a trader in identifying a trend. However, there are numerous other ways and indicators out there that can help you with trend identification. Once a trader has identified a trend, the next step is to place a trade. One common strategy is to wait for a pullback, then enter a trade in the same direction as the trend. In the chart on the screen, I have 22 range chart at the top and a 4 range chart at the bottom. The 2 charts do not look at time at all. It's all about price movement. To draw my levels, so support and resistance areas and relevant levels, I use opening range indicator. So it automatically plots for me where price opened at the session open and where the previous high and low of the day were, where the price has opened during the regular hours. And just as you see on this in this particular example, they've got the pre-high. The pre-high is referring to the Asian and London session before the regular hours open. That's the range that was achieved. When the regular hours start, also starts plotting, which is denoted by the white text. That's the regular hours opening range. I use the first 30 minutes of the regular hours is the opening range, and if price break below that, I go short, and if price breaks above that, I go long. It also has to be in agreement with the trend lines, obviously. In this particular example, I have the 50 EMA and a 5 EMA. When they cross, it means that the price is bearish, and then I would wait for the price to pull back to the EMA and then trade in the direction of the trend. So in this case, it's a short trend, and I would enter 3 contracts at this level with the stop loss 5 ticks above the opening range mid in this case. And then my first profit target would be at this previous low. This would be the first profit target, and then you let the trade run with the next profit target being the pre-low, because there is every chance that price might actually turn around at this point, because sometimes it is quite a significant area. In this case, price broke through that. By this time, I just have 1 position open and I have it trail the 50 EMA. So you'd leave the 3rd position running until price comes back and tags the trailing stop on the 22 range chart, not on the lower time frame. So how can algorithmic trading help new traders to catch the trend and ride it fully? Algorithmic trading can be a helpful tool for new trend traders in several ways. For instance, do you feel that you trade based on emotions? Well, one of the biggest benefits of automated trading is that it removes emotional bias from your trading decisions. New traders may be susceptible to making emotional decisions based on fear, greed, and other factors. Automated trading follows a set of predefined rules and executes based on market data, eliminating the potential for emotional bias. Do you find yourself hesitating before you place a trade? Well, automated trading can execute trades much faster than humans, allowing for more efficient execution. This is especially important for trend trading, where traders may need to act quickly to capture opportunities before they disappear. What about backtesting and optimization? Automated algorithmic trading allows traders to backtest and optimize their trading strategies using historical data. This can help new traders refine their approach and improve their results without risking real money. For 24/7 monitoring, automated trading algorithms can monitor the markets 24/7, which you don't have to trade 24/7, which can be especially helpful for trend traders who need to keep a close eye on the market movements. This can help identify trends and opportunities even when the trader is not watching actively. Automated trading algorithms can execute trades with consistent precision, eliminating the potential for human error. This can be especially important for trend traders who need to follow their strategy precisely to capture the opportunities. So in summary, automated algorithmic trading can help new trend traders by removing emotional bias, improving trade execution, speed and efficiency, providing backtesting optimization tools, offering 24/7 monitoring, and ensuring consistent execution of their trading strategy. However, it is important for traders to do their research and find a reputable, reliable, automated trading platform that suits their needs. Would you like to learn a little bit more about algorithmic trading? Would you like assistance to put together an algo to your strategy? If the answer is yes, please do get in touch with me. I'll be more than happy to assist you. If you found this video interesting or informative, please share it with like-minded people, and please subscribe and like the video. Thank you.